So, in this video, mistake number one, and probably the biggest mistake that happens through all other mistakes. This main mistake that all investors or traders or whoever you are will at some point encounter, and it leads on to pretty much all the other mistakes you will find in investing. Okay, investing, you've gotten into it, you've seen some gains, maybe not, maybe you have, but now we're going to be getting into some basic or most common investing mistakes that everyone at some point will either possibly do or do. So a lot of these mistakes I did as a starting investor, not knowing anything. So talking from experience, a lot of the times, luckily did not lose a lot of money. Otherwise, I would not be okay. So you'll hear this probably a lot, and it's called emotional trading. Mistake number one is doing emotional trading when you invest. Now, what this means is that you invest or you make sudden changes, you go on a tangent from what your original plan was with the stock, or you listen to news or something and it's all in the spur of the moment and you just make stupid mistakes. Stupid decisions, stupid mistakes, and you lose money, okay? So there's three versions of emotional trading that are most prominent. There's a lot, but these three will be the downfall of your portfolio. So the first one is buying on a rise, on a sudden climb. So again, example, Tesla. When Tesla was climbing like crazy, everyone was like, oh, geez, should I get in? Should I buy now? Don't buy on a rise, because at some point it might fall. You might be correct and you might buy at the bottom of a rise. Good on you. Chances of that happening, this big, okay? So don't do that. If a company is rising, ride the curve. It's a wave. And then once it comes down, you're going to swim back, i.e. buy some more, and then you're going to ride the second climb again. Don't think stocks, yes, that's how it's been like lately, which is great, but stocks don't always rise. So don't do that mistake of buying on a rise, and then, because what happened to me, buying at a rise, being like, oh, it's going to climb some more. Next day, down at the bottom, and then you start thinking, now should I sell, should I not? And then that's why it comes to the second part of this mistake. Suddenly selling because this stock dropped quite a bit on a day. So let's say it dropped 5%. You're panicking, you're freaking out, okay? You're a starting investor. But now, what you should have done is set out a stop limit loss. So what are you willing to lose on this investment? So for instance, let's say you invest in a company and you, when you invested, said, I'd be willing to drop down like 10% in this because I know at some point it's going to climb back again. But now on another day, suddenly it drops 5% and you sell everything. And then what will happen is the next day it climbs back up. And then you feel like a mango. Okay? So don't do that. Because if you stick to your investment plan, by all means, if it dropped 10% and you said you're going to sell if it drops by 10%, do it. But otherwise, don't freak out. And then the third one, which is not all that common, but it happens, and that's when something big in your life happens. Let's say you get married. Now all of a sudden, you need to buy a ring. You need to pay for a wedding. You need to do all types of crazy stuff. So what do? You're like, I need a quick buck. You take a proper investment that is doing a long-term thing. You take it out and you invest it into what someone said is going to make money in the next month, and you think you're going to make a quick buck, and then you lose it. Don't do that. If you've got money that you're willing to lose on the side, use that by all means. But don't go and pull it out of a long-term stock that you know is going to do a good thing. And part of this is don't listen to what other people always say. If, like always, that's what I always say. In my disclaimer of my videos also. Listen to what I say. Listen to what other people say. You can find great things. Then go do your own research. Go and look at what you like and what you don't. And if you agree, don't just be like, hey man, this guy told me to buy Sasol, and then you go and buy Sasol and now you are an unhappy person. You know? Like, don't do that. And that's it, guys. That is mistake one of investing. Don't do it. Be smart. Be better. Have a great portfolio. So don't emotional trade. Don't let your feelings take over. Be calm. If you look at a stock and it's doing some funny business, look at why. Make a decision. Do you think it's a long-term effect, a short-term thing? For instance, let's say you are invested into Coca-Cola, and Coca-Cola decides they're not going to sell Coke anymore and they're only going to sell Sprite, which is not great. So then you should know it's time to get out. Not saying they're doing that, they aren't doing that, so don't freak out. But you see, so then by all means, but let's say Coca-Cola announces that they're not gonna be selling tomorrow to honor something or some event. Don't freak out, it's one day. Like, don't just go sell all your stock because now the stock dropped 5%. Chill.